The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Wednesday the 18th, 30 minutes to the close. What do you need to know out of Europe? Case counts continue to climb sharply across Europe. Switzerland to Greece and everywhere in between. Israel says the next 2 weeks will be critical as fatalities continue to rise in that country. Data from Israel showing the third Pfizer shot 86% effective in those over 60. A briefing is about to start in the United States at the HHS on those third shots. We'll bring you details in a moment. As the Taliban sets up checkpoints around the airport in Kabul, Boris Johnson calls on allies to stop a humanitarian crisis in Afghanistan. A key ally of German Chancellor Angela Merkel slamming Washington as frustration and fear grow in Europe. And Tencent's top line grows at the slowest rate in 2 years as the regulatory crackdown from Beijing continues. Friday will likely see the release of a new data law that could have major implications for Chinese tech firms. It is also the story around the pushback that we're seeing from the Chinese regulators today on wealth. This push to see the wealthy give more, wealthy companies to give more, having a meaningful impact on European stocks today. The Stoxx 600 is up, but break the numbers down in a little bit more detail. You'll see the CAC 40 is lower. Names like LVMH, Hermes, and Kering all feeling the pain of that announcement coming out of China. Brent crude, though, after the data that Alex broke a little bit earlier, up by 0.2%, Alex.
Yeah, strong draw there on oil inventories. Guy, here in the U.S., it does feel like it's all about that booster. We heard some headlines that are going to come out. There's a press briefing starting any moment. Starting the week of September 20th, a third booster is going to be allowed for those in the U.S. You did see somewhat of a reversal. Energy is now one of the best performing sectors, along with materials within the S&P. I did want to highlight, though, two converging things here. One is the S&P Airline Index, yes, up by 1%. And then the Packaged Food Index for the S&P down 1%. But it's really been the reverse over the last couple weeks. So that stay-at-home recovery kind of took over. The PAC Index was actually up by 5% just in the last 5 days. Now, in terms of the Russell 2000, we're also up by 0.5%. I do wonder if there's a little bit now of optimism from that booster coming into play as we're kind of searching for that news peg and that next catalyst. We do have an auction coming out for the 20-year at 1 p.m. You're seeing a little bit of selling as yields move a bit higher versus some buying over in Europe when it comes to the bond market. So it feels like there isn't a clear narrative necessarily, but the market is trying to digest what it means when you have the Delta variant, but a potential booster shot and a pushback return to office. How does that market narrative all wind up making sense?
I think we're all struggling with that at the moment. Trying to figure that one out, I think, is going to be difficult and could take time. I think we need to see how the Delta variant evolves. It's already having a meaningful impact, you could argue, on the global economy. You only have to look at what is happening out in China with big port closures. That is going to have a ripple effect. It's going to have an inflationary effect. And that is certainly something that Norway's sovereign wealth fund is looking at very, very carefully. And the fear here is that if we do see inflation picking up, it could not only hit bonds, but also could hit the equity market as well. Nikolai Tangent on Bloomberg Television earlier talking to John Ferro, describing how inflation could hit his fund.
We are at a situation now where the bond yields are extremely low and the stock market is extremely high. And so therefore, any main change in inflation will hit both part of the portfolio, you know. And in the past, it hits one of them and not the other. But this time it can move in, both can move in the same direction.
How should we all be thinking about this when it comes to our portfolio management? Let's talk about positioning. Sonia Loud, LGIM Chief Investment Officer, joining us now. Alex kind of laid it out really well. There's a number of big moving parts at the moment, and we still can't figure out exactly what they're going to mean for the global economy. We know Delta is rising. We know it's having a meaningful impact. We're seeing inflationary effects coming off that. There is a labor shortage associated with all of this as well. How are you thinking about, if we are going to get an inflation pickup, what it will mean in terms of the way that you're going to manage money?
Yes, I think you have said it and laid it out very nicely in terms of the framework, right? If you look at the economic picture and we look at the latest earnings season, then clearly we are seeing the boost coming through from the reopening and the normalization trade. You've mentioned already with the Delta variant, we clearly have seen now upgrades stalling and the kind of talk around peak growth coming in. I think the one area that we need to add to the equation is valuations, and clearly the starting point, as you said, and obviously as we just heard, the equity markets are near all-time highs, whereas bond yields are near record lows. And so if the inflationary picture is continuing to surprise on the upside, and this is obviously an if and needs to be analyzed very carefully, then clearly this can disrupt markets. I think for the time being, what the market is telling you that the growth narrative is the more important one, and hence is driving risk assets and equity markets in particular. Now, having said that, this is not necessarily the full picture because a lot has happened underneath the headline levels of indices, and in particular the inflation trade, so the reflation trade that has been the dominant one and the winning one since November last year, clearly has tailed off a bit, and we have seen the more cyclical trade picking up again. Now, I think in terms of the proposition, we are still in favor of equity over bond markets more in general. We are short duration because we believe that the reflation trade has not run its course. Now, with regards to hitting portfolio on both ends, should the inflation picture not normalize, I think there might be a timing difference. Because as we know, inflation per se is not negative for equity markets until it's starting to hit, obviously, the monetary policy side. And we are going to see central banks stepping in, rising rates. And then clearly we are probably coming to a negative impact on equity markets.
Sonia, if you're short duration, does that mean you don't own tech and you're more into value and cyclicals?
No, we actually, so we are, when I say we are short duration, is we are underweight. And clearly my perspective here is from a multi-asset angle. And so when I say this, we are not actually short tech, because I think within equity markets, the picture is more nuanced. And we still believe that tech has actually a very strong longer-term structural story. And if you obviously look at the current earnings season, then this has been very well supported. I think overall with positioning in equity markets, it's no longer about the beta trade, so just gaining outright equity exposure, but being more selective in terms of the thematic exposure and the sectors we're picking. We know that with all the risk factors that we've just highlighted around the Delta variant and other geopolitical risks, we have to be far more selective in terms of the exposure we're seeking. But it is clear to us that if you look at the bond market, the reflation narrative and the inflation picture has not been reflected as in the way we think it should.
So you're basically saying the bigger risk lies in the bond market right now?
For the time being, yes. So we believe that if you look at the strength of the corporate fundamentals and the earnings picture that we've just seen, then we know that, as I said earlier, inflation per se is not necessarily negative for equity markets. It is only when the inflation persistence is such that we will see a reaction from central banks that we're entering potentially in the end of the growth cycle. And this is then clearly when equity markets will clearly take notice, and we might see a setback in equity markets.
Sonia, that brings me to how central banks are going to respond to inflation. So one narrative that was there was that we're seeing higher inflation, so the overshoot won't be as big as we thought. The other now, which is becoming more prevalent maybe, is that we are going to allow more of an overshoot because the Fed's going to go slower because of this Delta variant. And I just zero in on the Fed, for example. Which side do you invest on?
No, this is a fair point, because let's face it, we have spent, the majority of our time right now in understanding what are transitory price pressures and what are more persistent ones. And if you look at the latest inflation data that we got from the US, then it's clear that we are seeing a broadening of price pressures emerging. And clearly those that are related to the reopening and the normalization trade are coming back. And now we have to add to this picture the potential impact of the Delta variant and whether this will have an immediate impact or a slight dampening impact on the economic growth forecasts. So this is an interplay that I think, quite frankly, we need to see more evidence to have a better understanding on how this plays out. Particularly the way that Delta variant will impact the normalization and the growth angle, I think will be very different depending on the vaccination status of a country. We've just heard, obviously, the news on booster vaccinations and how this will help clearly allowing a company to stay open despite the fact we're seeing rising cases. This is, as we've discussed a number of times, this is still the ongoing risk, because for the time being, we know that it seems that the existing vaccinations are efficient with regards to the Delta variant. Yeah. But we obviously have to, continue to assume that there might be further variants that might be more resistant to existing vaccines. So I think this is not a one-off, this is an ongoing interplay. But this is why I think, coming back to the central bank question, I think we will see clearly an ongoing communication around we're observing the backdrop, we're observing the data points coming in to then see how to react.
And we're going to get minutes a little later on, 2 p.m. Eastern. Sonia, final question for me. The market's gone a long time without a significant correction. We've seen a mini correction, a very mini correction over the last day or so. How protected are your portfolios for a correction? And if we were to see a correction, what do you think is going to perform best?
So that is a very good question, because if you look at valuations, Guy, then we know the history tells us your starting points right now with regards to spreads on corporate bonds, with regards to government bond yields, with regards to equity valuations, your entry point right now tells you that your long-term return profile is very, very mediocre at best. Now, having said this, as we know, this is never a good indicator for short-term performance. And this is why right now, as we know, the health of the corporate sector and the earnings momentum is what is the driving factor. We have taken risk off the table. This is not necessarily always outright protection, but depends really, obviously, on single asset class fund versus multi-asset. But there are several ways to potentially take risk off the table. Easiest in a multi-asset fund in terms of the overall risk exposure you're taking. But as I said earlier, within a single asset class fund, clearly the sector exposure will help you to prepare for a potential setback. And this is what we have been doing.
All right, Sonia, thank you very much. Sonia Loud, LGIM, a Chief Investment Officer. Thank you very much. Well, coming up, the news is that the U.S. will start offering COVID booster shots to all vaccinated Americans. You're looking at a briefing that is just taking place underway right now. Paul Hunter of the University of East Anglia, Professor of Medicine, joins us next. This is Bloomberg. You are looking at a live shot from the White House. We're holding a briefing on the U.S. virus response. The latest is the Biden administration will start offering booster shots to all vaccinated Americans in late September. Joining us now for his take is Paul Hunter, a Norwich Medical School, University of East Anglia, professor in medicine. Professor, do we all need booster shots? How should this rollout actually go?
Well, we don't all need booster shots by a long way. I think the difficulty when you're deciding on when to give booster shots is who needs it. And you might be needed if you are particularly vulnerable and you won't have responded that well to just 2, or if the immunity that you have is beginning to wane and there is signs of that, or if the vaccine isn't effective against the new variants, against the Delta variant. I think what is unequivocal is particularly people who have severe disease, or I think the elderly, the over 80s, I think it's unequivocal, in my view at least, that they should be offered booster shots before the winter when they are still effectively going to be at risk. How far down the risk chain you give booster shots is a difficult question, because clearly we're living in a world where many countries in the world aren't able to vaccinate even their most vulnerable people. So balancing the risk morally against the advantages to individuals is always going to be difficult.
In terms of what our understanding of the various types of vaccines that have been delivered in terms of the need for a third shot. What do we know? The United States obviously heavily vaccinating with messenger RNA. Israel the same. They're having to go down the same route as boosters. Europe using a mix of mRNA and an AstraZeneca. Do these different vaccines have different profiles?
Well, they do to a certain extent. I think the mRNA vaccines are rather more effective at stopping infection, but all vaccines are pretty good at stopping severe disease. And I think we're coming to realize that actually these vaccines don't ultimately stop the transmission of the infection, although they reduce that. But what they do very well is reduce severe disease, reduce the risk of people going into hospital and reducing the risk of dying. And that the protection against that severe disease lasts quite a lot longer than protection against mild infections, the sort of infections that are more likely to spread the virus. So
no doubt then, other measures still need to be taken, some form of social distancing, mask wearing, etc. Under what conditions? Yeah. Well, actually, that is one question. And then also my question about, are lockdowns ever going to be in the cards again?
Well, it's difficult to predict 100% certainty, but it does depend on how far you are down the epidemic in your country. At the moment, if you have a very high vaccine coverage and if you have already had a lot of infections in your country, then you're getting to the point that actually you don't need to start worrying about these things as much as you had to. But if you've still got relatively low vaccine uptake in your country, and particularly if, like New Zealand and Australia, you've had relatively little infections to date, then you've still got a long way to go before you can actually hope that you're past this thing.
In Europe, in the UK, we've seen relatively high case counts throughout the summer. I use the term summer loosely, of course. And I'm wondering whether or not actually that is going to have a meaningful impact on the need for third shots as we come into the winter. How is the combination of natural immunity versus vaccinated immunity going to work?
It's actually interesting when you look at the different local authority, the different government areas in England. You see a general trend. If those areas have been hit really hard in the past, then often we're still seeing cases in the most recent data declining over the previous week. If you've got local authorities that have managed to achieve more than 80% of their adult population being double vaccinated, then we're often seeing decreasing incidence. It's those areas in between where they've not had much disease to date and where vaccine hasn't been as good, access hasn't been as good. So, yeah, there are still areas that are where we're seeing quite substantial growth in the UK, even though as a whole, cases aren't going up that dramatically.
The U.S. is being more aggressive than the UK in vaccinating children. Best estimate, do you think the kids are going to be able to go back to school in the fall, full stop?
Yeah, I mean, it is. Whether or not you vaccinate children has been a really big issue. I think initially people were arguing on the basis that if we vaccinated children, we can slow the spread of the virus. And I think the evidence now is that vaccines aren't that good at that. So the benefits to the children of vaccinating against not vaccinating is a very hotly debated topic in the UK, with some arguing very strongly in favour of it's in the benefit of children to have the vaccine, and others arguing equally strongly against it. And I think there's no doubt for children that if they've got underlying conditions or they live with particularly vulnerable adults, then yes. But otherwise, my inclination is against vaccinating children. And in fact, that's what the World Health Organization are arguing as well.
Be interesting to see how the relationship between third shots for the elderly and first shots for adolescents, how that balance is going to work. Professor, we've got to leave it there. Thank you very much indeed. Professor Paul Hunter of the University of East Anglia. Really appreciated. What have we got coming up for you? We're going to find out what Kabul's fall means for Europe and European defense. That's coming up. This is Bloomberg.
It would be a mistake for any country to recognize any new regime in Kabul prematurely or bilaterally. We will judge this regime based on the choices it makes and by its actions rather than by its words.
Boris Johnson speaking in the House a little bit earlier on. To be honest, that was probably the calmest moment when the Prime Minister was speaking, because everybody else in the House was going crazy over what has just happened in Kabul and looking for answers. It's been a scene that has been repeated across Europe. What does this all mean in terms of Europe's relationship with the United States? How does Europe manage this process going forward? Therese Raphael, Bloomberg Opinion editor, joining us now, writing a nice piece on this subject. What is this? Can you trust the United States is a question that I keep hearing being asked now. We knew where we almost stood with Donald Trump. The sense in Europe was you couldn't. That sense is now growing when it comes to Joe Biden as well, Therese.
Well, that's, I think, just it. This has been such a wake-up call for the British government, and I think for all the NATO allies in terms of the rhetoric that's come out of the Biden administration. There was a sense after Donald Trump left that there was a reset in relations, and it was in many ways back to the old post-Cold War order where the allies, really sung from the same hymn book in terms of maintaining the international order. And then here you had a unilateral decision by the U.S., not to the liking of the U.K. and a few of the NATO allies. And, clearly the whole sort of intelligence backdrop to it was a failure. And it's left a pretty big debate in Britain about what to do next. And we heard that in Parliament today. It was the first time that the chamber has been full, really, since the pandemic. And boy, was it frothy. MPs were packed in there, no social distancing, very few masks, and lots of very passionate speeches. And many of them came from behind Boris Johnson, what we call his backbenches, and they were not terribly sympathetic to the government. Quite the contrary, they're pretty critical.
Therese, that was the warm-up. We're going to carry on this conversation a little bit later on Bloomberg Radio. Thank you very much indeed. As Therese says, frothy in the House of Commons today. Therese Raphael of Bloomberg Opinion. OK, let's take a look at where we are with the markets. This is the picture we find ourselves with as we come into the end of trading here in Europe. The CAC 40 in particular is under pressure. The reason for that is China is going to clamp down on the ultra-wealthy. That's going to hit conspicuous consumption. That is going to hit luxury handbags and everything else you might want to buy from these companies. We'll deal with the details in a moment. That's next. This is Bloomberg. So we're wrapping up the Wednesday session here in Europe. Let's talk about where we are, because there's a bit of divergence in terms of the individual markets around Europe. I'll dig into the details in just a moment. But the UK is down, that's the miners. The DAX is up, but the CAC 40 is really suffering today. That's down to China. China is actually a fairly clear theme all the way across the European markets today, and I'll show you exactly why. So let's dig into the details. Let's show you what the Stock 600 has done today and how the session has developed. A positive one, but only just. Again, kind of, are you buying the dip? Is that the mentality that is out there at the moment? So we're back up to 474 today. Flat, though, on the session, up by just 0.1%. But there is a bit of divergence, as I say, between the sector stories. So let's, again, get in and figure out exactly what's happening here. China, the miners, that's certainly a clear kind of direction of travel, but it's the luxury stocks that I think are the most interesting. So the FTSE's down today. BHP was a big upside surprise yesterday. Today, a little bit of a drag. The DAX is flat, up by 0.3%, but the CAC is down by 0.7%. Let's walk through why. So China today has come out and announced that it is going to be pushing back pretty hard on the ultra-wealthy. The ultra-wealthy consume stuff produced by these kinds of companies, LVMH, Kering, Hermes, all listed in France. This has been a huge area of growth for the French market. It's been one of the real drivers of the CAC 40 over the last few months. The CAC 40, remember, coming back up to the kind of 1999, 2000 levels. It's lagged a little bit over the long term, but in the short term has been a real outperformer. So today you're really seeing the effects of that. Look at that. LVMH, MC down by 5%, Kering down by 3.4%, MS down by 4%. These stocks are really under pressure. Again, it's that line between China and Europe that you want to pay attention to. It's having a meaningful impact into the tech sector as well. I'll show you that in just a moment. In terms of the breakdown from the sector story, quite a defensive bias in Europe today. Utilities outperforming. Continental utilities doing a little bit better. Some of the UK utilities under a little bit of pressure. Travel and leisure bouncing back. We're seeing that stateside. Is that a reaction potentially to the third boosters? Healthcare up as well. That's a factor. Then we get down there to the basic resources sectors. That's the miners. I mentioned that's where the drag is coming through for the London market. Let's talk again about that kind of China narrative and what is happening here. Prosus, this is the tracking stock, effectively the derivative of Tencent. Today, tracking a little bit higher, up by 2.83%. We'll talk about Tencent in just a moment. Alcon, this stock absolutely surging, one of the best performers in Europe today. Surgery is starting to return, and this is a company that's been benefiting from that. It focuses on the eye care sector, and that certainly seems to be coming back quite strongly. But the marginal bit is, after so much of the healthcare sector was so focused on what was happening with COVID, that's starting to change. Carlsberg up by 2.26%. Apparently, we're all going back to bars. Who would have thought? Carlsberg reaping the benefits of that. Alex.
Yeah. For now, though, the CDC director here at least is saying that vaccine effectiveness is falling in nursing homes. So I'm just saying, it's not all go out and drink the Carlsberg. Okay, let's get to another story over in Europe. The Swiss private bank Pictet is a managing partner, Boris Collardi, are parting ways in an unusual move a little more than 3 years after joining the firm. The move will be effective September 1st. Joining us now, Marion Haltermeyer, a Bloomberg Swiss banking reporter. Marion, what's the significance of this departure?
Yes, thank you, Alex. So basically, Boris Collardi is leaving after 3 years of being with the bank. His hire at the Swiss private bank Pictet was already a surprise for the Swiss banking community. And his departure is not so much of a surprise, actually, because he had a hard time fitting in. He came with some baggage from when he was a CEO of Julius Baer, which was under investigation for alleged money laundering. And so that sort of followed him to Pictet, which is predominantly a very quiet Swiss private bank. And so there was a lot of culture clash there. So now we're seeing, what seems to be a mutual exit agreement where he's departing the bank just after 3 years, when typically partners at this bank stay for, 20 plus years.
In terms of what is happening here as well, Marion, Pictet's really been struggling in terms of the rollout of its Asian wealth management push. He was very much the architect of that. There's been significant numbers of departures. Can we draw a line between what's happening in Asia and what is happening at Pictet?
Yeah, so definitely. I mean, the reason Collardi was such a great hire for Pictet was because he had that Asia experience. And Asia, as we know, is the epicenter of wealth creation right now. And many banks are posturing to create bigger presences there. So that will be a blow for Pictet in a way. However, senior managing partner Renaud de Planta, who acts as a sort of CEO of the bank, has reassured the markets and its employees that they plan to continue their expansion in Asia, regardless of Collardi's departure. And in a way, if you look at this as if it were a public company, a public bank, he came there to expand the team in Asia. He's somewhat done that, and so he's now departing having thought his task finished. However, we have seen some departures there, so it remains to be seen just how sticky their expansion plans are actually there.
Quite a lot of competition, though. In particular, HSBC. It's interesting that on a day that we get this news about Collardi, we also have an article at the Bloomberg that talks about the chairman, Mark Tucker, really sort of tripling, quadrupling down on Hong Kong and saying that opportunities in China also are too big to ignore, even as that geopolitical tensions wind up escalating, saying that the interconnectivity between the U.S. and China is really pretty powerful, and he doesn't think that it'll get to a point where you have to choose sides. So, Marion, talk about the competition.
Yeah, exactly. The competition is fierce and has been fierce in Asia for quite a while in Asia for wealth management. So Pictet has been wanting to be in the top 10 private banks for wealth in Asia. Not having Collardi, we'll see whether or not they can maintain that ambition. But we've seen it across other private banks, UBS, Credit Suisse, and some of the others, HSBC as well, expanding its private banking divisions in Asia. It's a tough world out there, yeah.
We'll see how they get on without him. Marion, thank you very much indeed. Marion Halftermeyer joining us from Zurich after the departure from Pictet of Boris Colladi. Let's talk a little bit about what is going on with the markets. We are settling down. We see what is going on at the CAC 40 end of the spectrum, and it's been pretty painful. Alex, we're down by 0.7%. And as I say, it's LVMH, it's Kering, it's Hermes, it's the Chinese having a big impact in Europe.
Yeah, also here I should point out you're seeing a much stronger dollar, euro dollar now dropping 117. It did go below 117 for just a second. We haven't seen that in quite a long time. I have to wonder if we're looking at a little bit of a move into U.S. exceptionalism/safety. At one hand, the CDC director, Rochelle Walensky, is speaking at that briefing that we've been bringing to you guys, saying that the vaccine effectiveness is falling in nursing homes, but the shot's efficacy against hospitalization still remains high. This comes at the same time that we're looking at the call for more booster shots, which should kick off in the U.S. September 20th. And I think I'm trying to work out, guys, that a good or bad thing for the markets? Is that like U.S. is going to be ahead of that game, so go buy the dollar? Or is this like, okay, things are going to get worse, go buy the dollar for some safety?
Yeah, I think one of the concerns will be that this will further diverge what is happening in the United States between those that are accepting of vaccines, who are almost certainly going to be okay getting their third, and those that simply haven't had their first and have no intention of getting it. And I think this will only further exacerbate potentially that link. Europe has been slowly and quietly pushing ahead with its vaccine program. And I do wonder whether or not the greater coverage of 1 and 2 versus the rollout of 3 will provide maybe a little bit more protection as we go into the winter. It's going to be really interesting. And Europe was later with 1 and 2. So does that mean that it's able to get through the winter in better shape? I don't know. We'll find out. Well,
if Israel's any take, it might be a bit of a rough one. Apparently, there'll be boosters available at 80,000 sites here in the U.S. and will be free. All right, let's get back to that China story that Guy was just talking about. Tencent gaming growth definitely slowing down. That's amid China's crackdown. The company expects more internet regulation coming down. What does that mean for investors? How can you avoid investing in China? That's next, coming with Richard Kramer. Arete, Research Managing Director.
Don't know.
You don't know.
We'll find out in the break.
He loves correcting me when I talk in my Americanness. This is Bloomberg. Live from New York, I'm Alex Steele with Guy Johnson over in London. This is the European close on Bloomberg Markets. Shares of Tencent higher. That's despite the company's sales growing at the slowest pace in about 2 years. Joining us now for more, Richard Kramer, Arete Research Managing Director. He has a neutral rating and a 613 Hong Kong dollar price target on that stock. Richard, thank you so much for joining us. As we keep digesting all this regulation that comes down from China, when's the bottom for Tencent? And I don't mean the bottom in the stock price. I mean the bottom in just how bad things could get for this company and how much they have to rework their business.
So that is the right question, Alex, because we just today had news of 43 apps which were cited for excessive data collection. And Tencent's Weixin, WeChat, which is one of their principal apps, was one of them alongside their video and their maps product. Now, the company says it's going to embrace regulation and is ready to accept whatever is required of it, but we don't know when these regulations will be finalized and then put into practice.
Richard, how much worse does it get? How much more difficult does it become? I understand there's going to be potentially more regulation on the data collection front coming Friday.
So there is antitrust regulation, which is about exclusive relationships between any Chinese company and merchants or folks using their platform. There's regulations about data collection, which strike to the heart of targeted advertising businesses, even though Tencent would argue that it has less exposure there than some of the other firms. And it has adhered to the rules more strictly than some of the others. And as you're rightly pointing out, their education has been very much in the crosshairs. And that has had a knock-on impact on Tencent because the education sector was very large in advertising on Tencent. And even though they saw very good advertising growth, they suggested it would come off next quarter because they would miss the full quarter of impact of the education sector not being present in the advertising market.
So let's get to that, because the online advertising revenue increased 23%. Fintech, other business services increased 40%. What's going to be the growth rate? Like the growth rate we can starting to model here?
Well, unfortunately, we don't know right now because, for example, the online games growth rate was the lowest that you saw in many years, really ever, but it was against very tough comps. And the 40% growth rate you saw in fintech and business services had come down from 47% last quarter. And half of that is obviously the fintech business, which is going to be very tightly regulated by the Chinese authorities. There's also a number of products that Tencent has, analogous to Zoom, Shopify, CRM, Microsoft, or Google Docs, but they're not monetizing them right now. And their ability to monetize those products is going to be very much dependent on keeping on the right side of the regulator.
How do we value this company given what is going on? How do we value it when we look at it from a regulatory point of view? How do we look at it from a portfolio point of view? This is a company that has huge numbers of businesses that it's invested in. Some of those may or may not have been IPO'd. Some of those may or may not have been IPO'd in the United States. All of this is in flux at the moment, Richard.
Absolutely. And one of the reasons why the investment banks all have buy ratings on all these stocks all the way down is because they have a huge vested interest in continuing the $14 billion of capital raising that took place in China Internet thus far this year and the $500 million of fees they got from that. So Tencent's $223 billion of listed investments is about half in China Internet, and that's fallen by about 10% since the end of the quarter that they just reported. Now, alongside that, they have about 1,000 VC investments, many of which are slated or expected to be monetized by taking them public on exchanges such as in the US. And clearly that route to monetization of all those assets that Tencent has built up is going to be very difficult, if not completely blocked in the near term. So monetizing those extra assets, we put a very large conglomerate discount on them, partly because if you went to sell these large stakes in companies like JD or Meituan or others or Didi, the stock prices would crash, and partly because the ability to directly monetize these stakes is very difficult. What you're putting up there in terms of the chart shows you that the business is basically split between gaming, fintech and cloud services, and advertising. And the one area which was especially disappointing were the social network services, which are all the content services that Tencent hosts in video and music and literature and so forth.
Yeah.
And again, those had very tough comps. And there are going to be increasing regulations on the types of content that the Chinese companies are able to provide to Chinese consumers.
So, Richard, quickly here, is there a good way in your world for someone to invest in China at this point?
Right now, as far as we can see, there is just too much overall uncertainty across the entire sector to confidently say we can bottom fish these stocks. We have seen multiple attempts at people trying to make that call, again, oftentimes because they're somewhat self-interested. But the reality is that we are still seeing these regulations unfold. And unlike regulation in the West, where there will be long legal battles and rights of appeal, in China, these regulations are likely to be enforced very swiftly and very harshly, as you can see with the penalties imposed on Alibaba and Meituan to date.
Are you saying that China or Chinese tech stocks are uninvestable until we get more clarity?
I'm saying for many of the Chinese tech stocks, and you could probably put names like JD.com to one side because it's a pretty traditional online retailer, but for many of the Chinese tech stocks, they simply don't know the rules of the road that they're going to have to follow to give investors the certainty to understand that they can, that what the impact on their business will be. And we also don't know the wider environment that these companies will be operating in. Will they be able to provide, will they get approvals in the case of a Tencent for games that they want to launch in the market? This was something that if you go back to the chart from 2018 on Tencent, the stock drifted sideways for a year because they simply were unable to get approvals for new games.
Yeah, I remember that clearly. Richard, really interesting stuff. Thank you very much indeed. Richard Kramer, Arete Research Managing Director. Alex.
Yeah, Guy, just taking a look at the CDC conference that we have going on here in the U.S. Some more details coming out. We're hearing that about 115 million doses of the vaccine have been shipped to about 80 countries. They're really talking up the fact that they want to be able to support the global vaccine effort, but that another shot will give about 100 million boosters by the end of 2021. Seems to imply that they're going to try and give a booster to half of those that have already been vaccinated. About 200 million have already been vaccinated, so about half of that, half of them will get a booster by the end of 2021. So quite interesting there. We'll keep you updated on any headlines as we cross. All right, coming up, still a busy day. We got Fed minutes, we got earnings from Nvidia after the bell. We're going to discuss all that next. This is Bloomberg.
Okay, so Nvidia, the largest US chip maker, reporting earnings after the bell today. Analysts expecting strong results. Crypto gaming, is crypto going to show a slowdown? Let's find out. Bloomberg's Ed Ludlow joining us with a preview.
Yeah, what's crazy about Nvidia, guys, they almost left money on the table in the prior quarter. They had top-line growth of 84%, but they said that that growth was constrained by the global chip shortage. Come with me quickly into my Bloomberg terminal. Look at this chart and you'll see what I'm talking about. Just incredible growth. Nvidia has really cornered the market for graphics chips that power artificial intelligence computing. The market believes that. But if you go into the current quarter, as you said, the concern is crypto mining. And it's a juggling act for Nvidia. We know that crypto mining has really boosted demand for graphics chips. The problem is, what happens if that demand goes away, right? You have regulatory crackdowns in China. So to mitigate that, what Nvidia has been doing, and you see that's the elevated pricing in the aftermarket, Nvidia wants to prevent siphoning of graphics cards from gaming to crypto mining. They've done it in two ways. Crypto-specific chips, which really boosted the top line last quarter and should boost the top line this quarter. And secondly, they've made their graphics chips for gaming less effective for crypto mining. So it's really a juggling act. They don't want to make too many chips and suddenly see that crypto mining demand dissipate. This is a stock, as you can see on your screen, that investors have poured money into, and it's a strong outperformer relative to the S&P 500. Guy, Alex.
And not to mention ARM and sort of what's happening there with the potential merger with that UK company as well. Ed, thanks a lot. Bloomberg's Ed Ludlow. The other thing to watch, FOMC Minutes later today, 2 p.m. We have Bloomberg International Economics and Policy correspondent Michael McKee to help break us down. Mike, the words you're looking for.
The word I'm looking for is any kind of clarity about what they're thinking about when they might want to taper. The problem is the Fed meeting, and we talked about this at the top of the show, took place on July 28th. And since then, we've had the COVID come back in the Delta variant, and uncertainty has risen about the economy. We've had some bad economic data come out recently. And so at this point, the uncertainty index is up while the economy is, while inflation is rising as well. So which one takes precedence for the Fed? Will we see any kind of clue in the minutes? Now, you can see how the group breaks down here. We've got the folks who are not there yet, the folks who would announce a taper this fall, and those who are ready to start tapering right now. Will we move any of those pictures around after the minutes? That's kind of the question. And then, of course, as we mentioned earlier, do we get any details on how they're going to taper once they are going to taper? Back after the great financial crisis, they took 2 years from the time they started tapering until the time they finished. And of course, that was even pushing it back further because after Ben Bernanke announced they might do it, they had the taper tantrum. So do they do it much faster this time? We'll see if there's any kind of staff presentation on their options.
Yeah, the sequencing is going to be really interesting. 2 p.m. We're looking forward to all the details dropping. Mike, of course, providing a great deal of analysis. Looking forward to that. What else have we got in the next 24 hours? Fed Presidents Bullard and Kaplan both speaking today. We get more earnings. We've got Cisco, we've got Robinhood, we've got Victoria's Secret. There's also going to be a briefing on Afghanistan, and President Biden will hold a briefing on the virus and the third round of shots that we're all going to be getting by the looks of things. Alex.
Yep. And then tomorrow it's still busy. We get rate decision out of Norway. We get U.S. initial jobless claims coming down. We also have earnings from Estee Lauder and Macy's. Plus, I'm really into this. This is Tesla's AI Day. It's their autonomy day. Going to be really interesting, especially after the government's launching an investigation to their autonomous software.
Absolutely. Is this the critical dividing line between Tesla and the rest of the auto pack? We'll find out.
All right, that wraps it up for me and Guy. Coming up, you get Rick Reeder, BlackRock CIO of Global Fixed Income, joining Balance of Power with David Weston on Bloomberg Television and Radio. Plus, Guy and I are headed to Bloomberg Radio as well. If you are in London, check it out. The cable DAB digital radio starting at 12 p.m., 5 p.m. in London. This is Bloomberg.